Hey guys, good old buddy Mr. Biz here. It's been a few days since I've been on, but wanted to come on and answer some questions for, wasn't even a client actually, just someone I ran into and was saying, hey Mr. Biz, I'm sure you would know about this. And I actually do. So, and I've had this question before and I've talked to folks about it before, but the question being, why are bank rates sometimes, not only for business loans, but personal loans, car loans, things like that, why is it sometimes they're completely frustrating, number one, primarily because they're not very competitive. And I think a lot of times what happens is that happens once to someone and all of a sudden they say, oh, well, banks stink. They're a big pain in my butt. And they can be, no doubt, for sure. But, you know, these are kind of things we talk about in the 5-week program. I have Mr. Biz program. You can check that out if you want. No worries if not, but I wanted to throw that in there real quick. But so here's the deal. It's not that banks are evil. Well, most banks aren't evil. They're not trying to be evil, I should say. Of course, they want your business. But the big things are, so if you think about it very simplistically, generally speaking, it costs a bank the same to do a loan for, let's say for a business loan, for $2 million as it does for $10,000, right? The costs associated with that loan for the bank are the same. Of course, the money they earn from a $10 million loan versus a $10,000 loan substantially different, of course, right? That doesn't mean they only want $10 million loans. Of course, small business loans are very important, and you know they want to partner with you to hopefully you'll grow and you'll become great partners. And as you grow, you'll need that $10 million loan at some point. So that's part of it, is they might price their loans. It really comes down to their portfolio, and I don't want to get too technical about it, but it comes down to their portfolio. What is the mix of loans that they have at that given time? And it could change literally, possibly daily, right? When interest rates are volatile or the economy is volatile, it could change literally daily, but in a minimum weekly when they reset rates and things like that in their internal rates. And again, I worked 20 plus years at a bank. So in a lot of different areas. So having some understanding of this is certainly helpful. Has to do with the risk management. So again, coming down to their portfolio, you might be in an industry, let's say for a business loan, that they are not interested in being in, unless you are willing to pay a high rate, right? So they might say, hey, for a squeaky clean, perfect industry, we might give you a rate of whatever, make it up, 6%. But for the particular industry you're in, which has a high default rate, is risky, et cetera, they might charge you 8%, right? They might add 200 basis points to it. So that's another example, again, simplistic example of what might make it different. Of course, your credit comes into play if you're an LLC or anything like that. If you're going to have a personal guarantee, of course, they're going to look at your credit. So your credit will impact the interest rate as well, potentially. But really it comes down to, again, it's what they want at that particular time. They may have a lot of loans that are small loans. And so at that particular time, they may say, you know what, we want to focus on getting some larger loans right now. And then they'll get a remix of their portfolio later. And then maybe they'll have more competitive rates for smaller loan amounts. It could work the opposite way for large loan amounts. Maybe they have too many large loans and they want to focus things down a little bit. It really comes down to risk management in their portfolio. Are they overexposed? They could be overexposed, have too much exposure in the particular industry you're in. I know we went through that a lot when I was a fixed income analyst. We would look at things and say, gosh, this is a really good deal that we should buy. However, let's look at our concentration in that industry, meaning that if something catastrophic happens in that industry, or if that industry is very sensitive to, let's say, interest rate changes, economic environment changes, when the economy goes down, is that industry going to be particularly hard hit? So they want to make sure they're balancing that. So for example, they don't just, if you're in an area where there's a lot of, let's say, manufacturing, and your bank is concentrated in that area, it's a small local bank, let's say, they have to be very careful that they're not loaded up on just manufacturing loans, because if something happens and something significantly impacts the manufacturing industry as a whole, their loan portfolio turns upside down in a heartbeat. So that's an example of why bank rates sometimes are very frustrating. And it might be 1 week, JP Morgan Chase Bank is, uncompetitive, and whatever. Fifth third is great, and it might be 3 weeks later, a month or 2 months later, it's flip-flop the other way around. Again, a lot of it has to do with their portfolio and their risk management, which is something that we're going to talk about here in a future video, is you in your own business managing some risks, not to do with your portfolio, not doing that, but we'll be talking about that soon. So anyway, just want to hop on here real quick. Just had a conversation with someone, so it's top of mind. Again, we've got a 5-week program. If you want to learn things like this, I will literally help you run your business more profitably, more efficiently. It's a 5-week program. You get videos, you get live time with me. Again, I'll help you with all that kind of stuff. So you can go out to MrBizProgram.com and check that out. Good stuff. So thanks for watching, guys. Again, as always, love to hear feedback, positive and negative, right? Always want to make these better and better. Hopefully good content for you guys. As well as if there's any topics that you'd like me to cover, business topics. I see you in the back. Yeah, you in the back right there. I saw that little grin. No, we're not talking about those kind of topics. Not in here anyway. So any kind of topics you guys want, throw it in the comments or send me a message or anything like that, and we'll cover it in a future video. That's it for now, guys. We'll talk to you later. See ya.